You know, it's irritating because today it's Monday, March 14th, 2022. It's just after 11 a.m. I feel like I'm one step behind today. I've had the right idea on a lot of setups and plays, but my head is just not in the game. I'm one step behind. This morning, we had KSCP getting a nice little pop pre-market, and we were putting together a plan for it. And look at it now, it's running up to new highs, running up over 650. This morning, when KSCP was getting a nice little pop pre-market, we instantly said, hey guys, this is a previous runner. Anytime you have a previous or recent runner, the stock has a history of running, traders are going to remember that stock. Let's look real quickly at the 10-minute here, scroll out on this. Let me delete all these levels. You could see, look left on this, all this price action right here, right? This stock ran from 6 all the way up to a high of $27. This stock has legs. It can run. So traders remember that. And when they look back and see that stocks can run, they instantly say, well, if it ran before, it can run again. Little key things like that will separate you from the rest. Paying attention to small little details people can easily overlook. That's why with you guys, I'm really big on just keeping it bare bones simple. I'm not using indicators and overcomplicating things. I'm paying attention to the smallest little details that people easily overlook. So this morning we're getting a little pop right here, pre-market, up to a high of $6, and we instantly put together a plan, and we said for this stock to be bullish and potentially continue up higher, I like to draw out a line, and I call it my make it or break it line. That green line that you're seeing here at this 550s level, that was my make it or break it line. If a stock gets a pop, I draw out a line, and I tell myself at all cost, if the stock can hold over this line, the overall sentiment is still bullish. So we have to hold over that line. If we fall below that line, bears are in control and the overall sentiment is bearish. And I focus on the level. You guys know me, I'm not real picky about pinpointing it down to the exact price. I focus more on levels of interest. So the stock was in and out this morning of my green line at that 550s level. And we were just starting to break this down. And this is, to be honest, this is a very beautiful technical breakout. And it all comes with time. The more time you put into this and you're breaking down charts and you're seeing stocks move up and down, you start to get familiar with the territory and you start to get more familiar with how stocks like to move up and down. So you're not freaking out on every single little pullback. We preach all the time that pullback should be healthy. As long as we continuously keep building up in levels, that's all that matters. If we keep making higher lows, higher highs, we're building up in levels, there's progress. Overall, there's still good progress. Let's break this down. So we put together this morning that it got a little pop on it. We'll get out our little drawing tool here. So what happened here, we pop up pre-market, and then ultimately we wedge out. We wedge out. And then right when this market opens up, we break down from that wedge, and then we break into another wedge right here, right when the market opens up the first half hour of the day. And there's a couple ways you can look at this. You got either two wedges here, or you got like this weird little trend that you can connect with all the lower highs on this. And then as the stock starts to break up and out of this little wedge right here, you notice the volume that's coming in on it, right? Well, if we start breaking up out of this wedge, what's the next level that we're going to run up to? We're going to run up to the area where this last wedge was, all right here in the pre-market highs. So we get a breakup from this wedge, and we say if a stock breaks away from a pattern, what you're going to want to see is a pullback and for the stock to hold up at the where it broke from that pattern. So right there, this area right here where I'm drawing this circle, this is where you should be considering going long, because you already have your low plotted in right here. You could put your stop loss down just below that, just below the low of day. You have a level you can start to work off of. So you enter in at this on 550s, you're putting your stop loss down here, 530, 525, you're risking around 25 cents. And you could sell some up at highs, up there at $6. Sell half at 6 and then let the rest run and work for you. There's multiple ways you can go about this. It's just all about what makes you feel comfortable. So after we break up from this wedge, we get a nice little pullback here. We push up to pre-market highs just about, and the level from this wedge, and then we linger around at the highs there right here. Then we pull back down to VWAP here. But overall, we're still making progress. When you look at it, it's easier to put it together after the fact. But when you're in the moment, you're freaking out. You don't know if it's going to fail on you, fade out. Just tell yourself, as long as we are making progress, that's all that counts. We're continuously making higher lows, right? Even as we're holding up all right here, we're still holding up technically higher than where you entered right here, right? So you're making progress. We hold up at that level, and from that, gets a nice push back up, and we start blowing up to the highs at 6. And then all this volume confirms it right here. As we start to blow up over that $6 and we're running up here, look at the long wicks as we're running up to 670s. So if you're considering buying when the stock is breaking up right here, you're going about it all wrong. See, the smart money, they're selling into this move all right here. Because remember, we were buying and putting together a plan right here, and you're selling and taking your profit as it's all right here. But it's just all about putting together a plan, seeing the potential before anybody else. And this is where it pays. When you see a move like this, running up like this, scroll out, go back. How did the stock get from, scroll out on your chart and go back. How did the stock get from here up to here? Go all in here and put it all together for it to make sense for you. And then in the future, when this something like a scenario like this pops up again, you'll be prepared to take advantage of the opportunity that could be had. That's what it's all about. So it's all about the work that you put in. Study these charts, break them down. And even when we zoom out on this too, you can kind of like draw the line right on this. Trend lines, they don't have to be perfect. Like this line right here. You see how tightly they're pulling it back with the lower highs on that with your naked eye, don't you? From the $6 down here to 530s, they pull it back super tightly, and then it starts to get a pop. I call it a micro pullback, and that's your micro pullback right there. From that micro pullback, then you have that volume spike. From there, you have your low of day, right? So you have a level you can base your risk off of. You enter in on it, you put your risk down just below the low of day. The rest, put it together as the stock continues to push. So now that we've broke pre-market highs and the day highs here at $6 and where this red line is, as the stock starts to pull back here, you'd be looking for it to hold over that $6 for any type of continuation move. But I like to say the longer a stock is in play though, and the more volume that comes into it, it makes it harder to trade. It truly does. Think of it as the more people you have, the more problems you're going to have. So I always try to take advantage of these plays and opportunities before anybody else. I like trying to get in on these plays just as it's starting to pick up in volume. We know, and the way I teach you guys, you have to think like the 10%. Statistics have shown 90% of people fail and lose money in the stock market, right? So you got to think like the 10%. You need to think outside of the box. So you're the 10% ultimately selling to everybody that's then chasing the stock as it's hitting a new high of day. The way I teach you guys, everybody has their stock screeners and scanners set up to pick up what type of stocks that are hitting high of day. So if you can visualize the potential for these stocks, that's where you're going to make your money.